see sunrise. I like seeing sunrise. I do a lot of reading, and I like reading all kinds of things. It can be fiction, it can be non-fiction. I read a lot on war. I like reading even non-fiction books on crime. So lots and lots of areas that I like.
Taking of legal action, including defamation, on times now.
I will get up, you tell
I'm not scared of who comes or who goes away, but people are watching right now.
Why do we raise our voice? Why do we shout out loud? Why do we make every crusade a personal one? It's all for a good reason. Because we believe that courage needs decibels.
Why are you talking? The channel spoke of those people, but the BJP decided to go against.
And inertia needs a good jolt. Because there shouldn't be any holes in our roads or in our governance. Because our standard of living should rise while inflation should drop. Because justice shouldn't be the exception but the rule.
Rape charges against you. No comment.
That's why we raise our voice.
Enough of this kind of political arrogance.
So that our emotions may deliver the solutions we seek. So that our echo carries on to shape our tomorrow. So that the fire raging within us may ignite the action India needs. This is what it takes to be the change we want to see. Times now. Action begins here.
Doctor, you're a funny man. Lo, मेरा फैमिली एडवाइजर आ गया।
अरे तुम्हारा फैमिली डॉक्टर तो मैं हूँ। ये फैमिली एडवाइजर कौन है भाई?
भाई जैसे तुम मेरी हेल्थ का ख्याल रखते हो, वैसे ही मेरी वेल्थ का ख्याल रखता है मेरा फैमिली एडवाइजर, मेरा SMC। SMC, इंडियाज अवार्ड विनिंग ब्रोकर जो रखे आपके निवेश का ख्याल। SMC, मनी वाइज, बी वाइज।
At 8 p.m., the talk is all about the markets.
The hits and the misses.
The ups and the downs.
What news is moving the stock?
And what's shaping trade.
Stay one step ahead of the market.
Get street smart on Market Up.
Only on ET Now.
Presented by Hettich Fittings. In association with BMA Wealth Creators. Building relationships, creating wealth.
At the heart of every big story, there is politics. And politics in India has taken a decisive turn. A turn that will impact you and your business. Join me, Sagarika Ghosh, as I decipher the changing political landscape in New Delhi. Catch Capital View with me, Sagarika Ghosh, only on ET Now.
Hello and welcome, I'm Anisha Gupta, and up ahead we have a very special episode of Hot Commodities lined up for you. But before we do that, an year-end headlines is coming up for you there. And it's been a bleak year for gold and silver as equities overtook the space. Investors saw better returns from stock markets which outshined the precious metal space. And it's not just the precious metals. The crude oil prices have clearly beat their fall. The crude futures have plunged nearly 50% in 2014 from the kind of highs that we saw in the month of June. The pace of the slide in prices has been fastest in nearly 8 years. And the agriculture space really has the spices space buzzing, which has seen good returns coming in for this year, with the turmeric prices at 3.5-year highs and jeera at 2-year highs as well. And it has been a weak year as fast as most of those non-agro commodities go. We have seen gold and silver prices decline for 2014. It has been a ditto case for the base metals also, which have seen a mixed trade, but we have seen sell-on all rallies coming in for that market also. The Chinese slowdown, the weaker data coming in from Europe, all of that has taken prices down. On your screens, the gold prices are down nearly 2% in COMEX. We should get the Indian prices on for you as well, because we have seen sharp slides coming in for that too. Let's get on board then top brokerages in India who will tell you on how 2015 should be panned out for you in sense of commodity trading. Joining us on the show are Vijay Bhamwani, who's author and CEO at BSPLIndia, Kishore Narne is Associate Director, Head Commodity and Currency at Motilal Oswal. We also have with us Naveen Mathur, who's Associate Director, Commodities and Currencies at Angel. Ram is Senior VP, Head Commodity and Currency at Anand Rathi. And we also have Kunal Shah, who's VP Commodity and Currency at Nirmal Bang. Gentlemen, all of you are so welcome on this show, and the commodity year, the gone by and the year ahead of us is what we will talk about in the day today. Ram, to you first, and how would you look at the precious metals on how they have been? How would you summarize it, and what's your sense now coming in for the new year?
Most of the 2014 has been a mixed overall. If you see in 2011, we have seen a high of international market $1,921. And the fall from there almost to almost $789 to almost 1132 suggests that still there is a room for further downside towards $1,100 and $1,050 in international market. In domestic market, we have seen a high of almost 35,074, and the fall from there it is almost 24,830, a fall of almost 10,245 in 2013, and in 14 around 25,164 to almost recent low of 25,164. There is a fall of almost 6,305. Looks like the present trend likely to continue. Just want to tell that if the market closes on international markets 1,200 below in this quarterly closing, looks like we might see a lower level first, then a higher. So overall, net to net, see on a domestic market, we may see around 24,000 to 29,000 range in 2015.
Well, that's about the gold prices. Coming to you then, Naveen, what's your sense for precious metals, and how are you putting out a trade for the new year?
Thank you very much, Manisha, and would like to congratulate or give the best wishes to the viewers for the Happy New Year coming up, and belated Merry Christmas. I think what Ram said, I totally agree with him, that the trend remains to be bearish for the precious metal pack. Particularly if you see the US economy is growing, the dollar has strengthened by around 13% this year, and we have also seen the kind of a data flow coming in from the US is pretty much positive. All said and done, we don't have too much of the geopolitical tensions except for the Ukraine and Russia problem, or maybe the ICS problem in Iraq and the Middle East. So I think with that particular trend continuing, the major factor also is, Manisha, the crude prices are really down. So means if the crude prices are down, the inflation hedge demand for gold would not be too great. Therefore, all these factors lead us to say that the prices may remain bearish. Fed may also hike interest rates by mid of the coming year. If the data pointers are positive for the U.S. economy, I think the Fed may even prepone by a month or so for these means interest rate hikes. So overall, looks like to be going forward with the dollar strength, inflation demand low, hedge demand low, geopolitical tensions not being in place too largely, and with particularly the kind of a strength on the economy for the U.S. markets, the prices will be on the downward trajectory. Indian markets may see around 24,500 levels also, which are currently at around 26,500, 27,000 right now on the MCX. I am also bearish on the silver, particularly with respect to the precious metal and the base metal pack. And since it goes tandem with these precious metal and base metal pack, I think we will see a negative trend continuing for silver to an extent. For the international prices on gold, I see around $1,100 levels where the prices may touch on the international markets in the year 2015 and may consolidate there. And Indian markets around 24,500 to 25,000 would be the level to watch out where the M6 prices or the domestic prices may stabilize at.
All right, we seem to be starting 2015 also on a short note or the negative note for the precious metal space. Well, Kishore, the gold prices are down 7% for 2014. Silver is down 17% in the Indian markets there, and this perhaps is a second straight year of declines coming in. Do you see much pressure continuing for the new year?
Yeah, obviously, I think both Ram and Naveen has beautifully consolidated all the pointers, so nothing more to add, but I think one thing is for sure one should be expecting in 2015 is it's not going to be a one-sided downtrend. So it should be a range-bound volatile market without any massive trend here. Expecting a plain bearish trend right now is a little difficult because we have been already, as Ram mentioned, the levels, we've been beaten down long from the tops. Most of the news is discounted. Most of the news is out, as Naveen also said. Most of the news is out. The expectations are typically one-sided in the market. So that actually gives us a little scope that probably we might have a one-sided market where any pullbacks will be much sharper. So anything which close to around $1,300, $1,280 could be possible. On the lower side, again, $1,080, $1,100. So that's the range, and we will be hitting this bottom and top range very often, and it will be a sideways range bound volatile consolidation year. So it will not be plain cakewalk for the next year. So it will be a really traders year rather than an investors year.
Vijay, getting you in the conversation, what's your sense coming in for silver? We have had 3 sell calls till time, but do you think there's a possibility of an upside also on this one?
Good evening, Manisha. I've been staying away from futures market in bullion for almost 7 quarters now. That view still remains in force. I would maintain my earlier position that we are in a high beta pro-cyclical market with a deleveraging bias, and the deleveraging bias is likely to persist in the hard asset space. Having said that, I'm open to the idea of bottom fishing for physical delivery of 99.5% uneven uncut bars on silver, provided I get it at lower levels of 35,000 or below. I would keep a stop in the vicinity of 32,000 odd levels. I would be open to the idea of keeping a leeway of 1,000-1,200 rupees on a stop here. Although in the physical delivery market, your stop can be a lot more lenient than the futures market. During the course of calendar year 2015, I would expect silver to go to the vicinity of 42 to 44,000, and that is my target on the upside for silver. I think the pro-cyclicality is likely to persist. The bias for deleveraging at least seems to be persistent till the first calendar quarter, barring any fresh data points emanating. And what I'm betting on is just a technical pullback, if you may.
All right, so a buy on silver coming in here. Last one, Kunal, what's your sense on the precious metal space, and how are you looking at opening fresh trades in the new year now?
It's very difficult to say that it has already made a bottom, because we are yet to see some major events which are going to have a serious implication on gold prices. But one interesting thing what we have seen in last quarter is, in spite of the way dollar index have been strengthening, gold prices are not falling abruptly. That mainly on account of Indian gold restrictions have been moderated. The Indian demand has been improving. Chinese demand from UAE seems to be improving. Retail demand is improving. So these are the factors which is holding on to the gold prices. But the moment the retail demand subsides, the retail demand goes down, again that factor of dollar index strengthening to levels of 92, 94, that will come into the play. So I do not foresee any major upside above $1,250. I think those are the levels. Gold, anytime gold moving at $1,240, $1,250, I think at that juncture wants to start going short rather than shorting it right now. So we are going to see a imminent rate hike by US during 2015, and that is likely to have some negative impact on the gold. So I would not be very bearish. I would say gold prices can decline and test levels of 1100, but I would not say that gold prices are going to decline to $1,000 or $950. That doesn't look very likely, because the moment gold price now declines, we have seen the retail demand improving, ETF selling, even though it has been it has been very aggressive in last week also, but gold prices are not collapsing to that same tune. So don't expect a major sell-off. 1100 seems to be the bottom for the year 2015, and on the upside I expect gold not to breach $1,250. So that seems to be my annual range for gold.
All right, so that's the range really coming in from our experts on the gold and silver prices. But gentlemen, stay on with us. We will go for a short break, come back and talk about the energy space, where the crude oil futures have plunged nearly 50% from 2014 highs.
Presented by MCX.
Managing family, managing work, and of course, very importantly, your own little habits, so to say, or hobbies that you have. Managing those. For example, I like reading, I like music, I like movies, I like lots of things. So, how do you release time for all that while the work pressure is there? So, one of